The stock market is crashing, and there are three main reasons why this is happening and why it could continue to get much worse. First, I'm calling this a silent crash because, although the majority of stocks are deep in the red over the past few weeks, the S&P 500 is only down 2.5% from its highs because it's basically being carried by five big tech stocks. But the biggest reason why stocks are pulling back is because of the dollar. The rallies in stocks, crypto, and gold in 2025 have been largely fueled by a collapsing dollar, falling over 12.5% in the first half of the year. But now the dollar is finding support and is up close to 4% in the last few weeks alone. And if this trend continues, the markets will have a much harder time continuing to rise. But something else this recent rally was fueled by was the promise of more rate cuts in 2025 and 2026. Because over the past 6 months, the markets have been pricing in much lower rates, which is typically bullish for stocks and cryptocurrencies. But now, rate cuts expectations are falling, and markets don't like that. And finally, the chart that worries me the most is the 10-year minus the 3-month Treasury yield spread, the most reliable recession indicators in history. This represents the difference between long-term and short-term interest rates. And every time this line goes from negative back to positive, it signals that a recession is about to begin. And it's been accurate 100% of the time for the past 7 decades, nailing every single downturn since the 60s. And now that line has just flipped back above zero, meaning the clock may have already started ticking for the next recession. I've put the full list inside our private community, along with notes on risks and entries. Join via the link in my bio and type AI layers when you get in, and you'll unlock the files and this week's watch list.